Good morning, everyone. On behalf of Vetiva Capital and our media partners at Frontier Africa Reports, I welcome you to the Vetiva breakfast meeting today. So today we'll be having the usual rundown of the equity and fixed income markets by our traders, as well as other Pan-African updates from our media partners at Frontier Africa Reports. Before we start, we'd like everyone to note that the meeting is being recorded and is also being broadcast live on our Vetiva online Facebook page. We'd also like everyone to note that this meeting, the recording of the meeting may be shared with third parties. Also, the session is supposed to last for only 30 minutes, and this will include Q&A. So although if we are unable to get to your question within the 30 minutes limit, we encourage you to send your questions to research@vetiva.com and we'll get you a response as soon as possible. So very quickly, we'll be starting with the fixed income market, where Omarige will take us through currencies and the happenings in the fixed income markets. Good morning, Omarige. Hello, Omarige.
Good morning. Good morning. Good morning, Chima. Good morning, everybody. I'll quickly start with the money market. The money market is still very liquid. Market opened around 133 billion negative yesterday. When we adjusted for repos, the system was about 167 billion short. This is a significant improvement from the opening figures of 408 billion negative recorded on Wednesday. Despite these improvements, money market rates maintained to trade around 15% levels, and this was largely due to the increased funding pressure yesterday as players had to make provision for the OMO auction debit. We expect the money market to trade at slightly lower levels today, barring any significant shock to the system. Moving on to the FS market, the parallel market remains stable to trade around 485 Naira to $1, while the earning window trade at the hour 420 Naira to $1, closing at 411 Naira to $1. That was a 50 kobo depreciation from where it closed on Wednesday, which was 410.50 Naira to $1. The earning industry turnover decreased significantly to $106.34 million yesterday from the $172.52 million seen on Wednesday. Yesterday, the CBN released a statement that they'll be increasing the Naira for dollar. They are going to be extending it indefinitely. They released that circular in March, where they proposed to pay 5 Naira for every $1 received as remittances from licensed IMTOs and commercial banks. So the tenure for that was supposed to elapse this May. They have extended it indefinitely, and this is basically to support the FS liquidity in the system. So we believe that this will significantly improve FS liquidity in the system, and our outlook for the Naira remains for the interim. It will continue to hover around these levels until the liquidity improves significantly. For the T-bills market, we witnessed a muted trading session yesterday as the OMO auction took center stage. There were a few offers on the mid-dated papers, particularly the September papers. Offers seen on those papers were around 3.6% levels. On the other hand, we also saw offers on the OMO segment, and offers seen on that end were majorly on the long-dated papers, especially February maturities. Offers were around 9.05%. Overall, few trades were consummated across both the NTB and OMO segments, and this was largely due to the strained system liquidity. The OMO auction, despite the CBN offering 20 billion, 10 billion less than the OMO repayments that came in on Tuesday, that was 30 billion. They could not allocate the total amount they had on offer. Our subscription level came in very low. The short end maintained to close out 7%. Subscription on that level was 4.31. Total amount offered was 5 billion. And the total sale was 4.31 billion. For the mid-end, the stop rate maintained to close at 8.5%. Total amount offered was 5 billion. Subscription was 3.8, and total sale was also 3.8 billion. For the long end, the stop rate maintained to close at 10.1%. The subscription level was 14.3 billion. Total amount offered was 10 billion, while the total amount allotted was 8.95 billion. We expect the TBS market to trade on a quiet note today in the absence of any major credit to the system. Moving on to the bonds market, the bonds market continued its bearish run yesterday as liquidity drained players tried to create liquidity by showing attractive offers across the benchmark curve. It was majorly a seller's market yesterday as buy-side players could not take advantage of the attractive offers seen across the curve because of the shortness of cash in the system. There was mild demand on the long-dated maturities with bids around 14.2% levels, while the offers were around 14.15% levels. There were also offers on the short-dated maturities, especially the 2023 and the 2024 at 11% and 12% respectively. But there were no corresponding bids on those papers. Overall, few trades were consummated across the board. We expect the current sentiment in the bonds market to persist in today's trading session. That concludes it for fixed income. Thank you very much.
Thank you very much, Amerigo. Next, we'll move on to Sean, who will cover the equity market. Good morning, Sean.
Yeah, good morning, Chima, and good morning, everyone. We start off from BLVM, where the index closed lower for the first time this week by 33 basis points. The sentiment was largely negative in the market as we saw a decline in both volume and value traded. Market breadth was also marginally negative with 15 gainers and 16 losers in the session. Losses in Aura Group, Togo, and Palm Cote d'Ivoire were substantial enough to pull the index, as gains in Crown and Citao wasn't enough to turn the tide, the negative tide that we saw in the market. And going into today, we expect a mixed session. In Ghana, the index sustained positive run with another 55 bips appreciation led by Guinness Ghana Brewery for the second consecutive day with 9.32% price increase, as well as MTN Ghana as well. Those were the two gainers in that market in yesterday's session. Guinness Ghana also led the activity chart with the largest volume traded in the market. But despite a decline in both volume and turnover, the gain pushed the 1 week return of that index to 11.6%, which is quite significant for just a 1 week return. And the year-to-date return moved to 40.05%. And we expect this positive sentiment to be sustained in today's session, which is the last trading day of the week. Then back in Nigeria, the negative sentiment in the market persisted for a third consecutive day of loss this week as the ASI shared 81 basis points to further push the year-to-date of the main index to negative 2.81% year-to-date. The three trading session of this week has closed down for a return of negative 1.82%, which is quite significant there if you look at it. Well, we saw sell-offs in ICAP stocks like in the previous session accounted for the red close we saw, as the two most capitalized names closed lower, which is an MTN and Dansem, MTN with 465 bips loss, and Dangote Cement with 249 bips loss, as well as and Adova and WAPCO all contributed to the pullback we saw in the market. I think gains in some other mid to large cap stocks like Zenith, Total, Access, and even Seplat, which closed at its limit high price, wasn't able to change the negative course of the market yesterday. Speaking to activity level, volume and value improved as we saw crosses in names across sectors, with large cap trade, with large crosses actually in Access Bank. We saw in WAPCO, we saw in MTN, we also saw in Seplat as well. For sectoral performance, was almost flawless for all the sectoral performance, all the sectoral index to close positive, but save for the impact of the loss in Dansem on the industrial goods sector. The industrial goods sector closed down negative 1.19%, and it was the only sector that closed negative in this session. We saw gains in Seplat and Total, also lifted the oil and gas sector to an impressive 6.5% sectoral gain. So oil and gas was, we saw some impressive gain in the sector. We have also what we noted yesterday, we have noted investors' strong interest in the shares of Access Bank. And we noticed this is on the back of the very impressive Q1 results. We've seen the counter move from around 7.35 to close Naira to close at 8 Naira 20 kobo yesterday. So going into today, we expect the session to close mixed as investors cherry pick on counters that are still fundamentally sound, but largely trading lower than their intrinsic value. We believe movement in large cap stocks will basically continue to dictate market direction, while the week is expected to close in the red due to the first 3 sessions of consecutive losses of the index. I think that will be it for the equities market. Thank you very much.
Thank you very much, Sean. Just before you go, there's a question for you in the Q&A box. So someone is asking, what is the percentage of foreign portfolio investors in trades in the equity market year to date, and what's the outlook for them to the end of the year?
Right, thank you, Chima, for the question. I think largely before the end of the meeting, I should get the figure, but largely we've seen retail players, or we've seen local players being the most dominant in the market since the beginning of the year, and the reason isn't far-fetched. The foreign portfolio investors that are basically on the sell side are having challenge moving out their funds. So they rather just hold on. A few of them, what we've seen in April, we've seen them being active, and largely what they are doing is reinvesting those dividends that has been paid. So you see most of them coming into some names like GT, Access, Nigerian Breweries, Nestle, because they are reinvesting most of the dividends that have come from those paid out from those companies. For the outlook, I think I'm not sure anything will change. What we'll continue to see is foreign investors holding up and trying to watch the market. Their interest at the moment is exiting, at least for the equities market, exiting largely on the back of the FX challenge, right? Some are likely rotating to the fixed income space as we continue to see the OMO rate move up a bit, as CBN would likely want to hold on to those hold on to those foreign investors. But largely, I think the play will be that foreign investors will continue to stay on the sideline. What we've seen so far, what we've seen increasingly in the last couple of weeks is local players dominating the market. So I think that's where we'll be seeing. But that's the outlook for both in terms of participation from foreign investors in the market. But I should be able to give that figure for how far they've done, maybe between January and March, according to the Nigerian Stock Exchange. Thank you.
Thank you very much. Next, we'll be moving on to our media partners at Frontier Africa Reports. Today, we'll be hearing from Boston Amorfai. Good morning, Boston.
Okay, it should actually be Temple. So good morning, Chima. Good morning, listeners. And in Kenya, the private sector PMI sank from 50.6 reading to 41.5. That's for the month of March. Reasons are not far-fetched. It's because of the renewed lockdown. There's been a lockdown to reduce the coronavirus surge cases and deaths. Of course, there was also a ban on the sale of alcohol. And that was only just lifted last weekend. So even the PMI reading for the month of April shouldn't be expected to be positive. That's the ones coming from our Market Stanbic Bank of Kenya. We also know that the Kenya Commercial Bank has now notified Tanzania's Fair Competition Commission, FCC, of its intention to buy or acquire the shares of Bank ABC, that's African Banking Corporation in Tanzania. They've made that submission to the regulator and they are awaiting the approval. This was a deal that commenced sometimes last year, late November last year. And so it looks like they are now ready to take off with the purchase. In Uganda, they are seeking some $900 million 3-year loan package from the IMF. This is, of course, after a $490-something million loan that was given by the same IMF to them last year. The objective of this 3-year loan package is to help them support the budgets for the next 3 fiscal years. We're hearing again in the news that Access Bank, Zenith Bank, and Attijari Wafa Bank of Morocco are the key or the leading bidders for Bob Diamond's shares in Union Bank, the 49.9% stake that he has in that company. This story has been in the news for a while now. It's back in the wires again, and we're tracking it to see what becomes of it eventually. Whoever purchases it successfully will hit the news wire with that results. We understand that in the southern part of Africa, Total has now resumed the production of crude oil in the Zinia Phase 2 oil field. Of course, this is a project that includes the drilling of 9 oil wells and is expected to reach a production capacity of some 40,000 barrels per day by next year, middle of next year, by about this time next year. For the northern part of Africa, the news from there is more corporate as well, and it's that GSK Egypt shareholders are now planning mergers and acquisition with Amon Pharmaceuticals. And that is not concluded yet, but it's something that is also in the works. For now, these are the stories and headlines that we have, and thank you for listening.
Thank you very much, Temple, for the updates, and apologies for the error earlier. So now we have come to the Q&A segment of this session, and I encourage you to send your questions in using any of the chat boxes available on Zoom, or if you prefer to speak, you may raise your hand and we'll call on you to speak. Also, if you're joining us on Facebook, please send your questions in using the comment section and we will read them out. While we wait for any questions that we may have today, we'd like to let everyone know that from next week, We will be having a representative from IC Securities Ghana. They will join us for a summary and outlook on the Ghanaian market. So IC Securities is an Africa-focused investment banking and securities firm. They serve sovereign, institutional, and corporate clients. The firm is one of the leading investment banking firms in Ghana and is a licensed dealing member of the Ghana Stock Exchange. And they're also authorized to operate as a broker-dealer by the Securities and Exchange Commission in Ghana. So they will join us weekly, and that will be starting from next week. And we look forward to having an interesting session with them. So we'll just wait for a few minutes for any questions that we may have. And while we wait for that, I have a question for Omorige. So earlier you spoke on the circular that the CBN put out, extending the Naira for dollar scheme indefinitely. So I know that the scheme has helped them to be able to better track dollar inflows. But apart from that, do you really think that it has been very effective? Because for them to be extending the deadline indefinitely means they must have seen some, positives from the scheme. So based on your tracking of the FX liquidity over this period, do you think that this has been effective over this time? Hello, Omorige.
Hello, Chima. Thank you for your question. Okay, so the circular was initially released in March. So the time period was supposed to be 2 months. So the deadline was supposed to elapse tomorrow. So they have increased the timeline definitely. Given where the dollar liquidity is, it actually makes sense, given that the FS reserve keep dwindling and everything. For remittances, the projection is we actually get about 5 billion per quarter. And when you look at the figures from other sectors, this only trace oil earnings. So from what they have done basically is to kind of like offer an incentive for recipients of dollar remittances to be able to receive their inflows via official channels so that they can be able to track the total amount that comes into the system and also boost official liquidity figures. And this has played out in the past couple of weeks. So they are extending the timeline basically speaks to the advantages that are associated with this incentive. So they are extending the deadline to better track, and also given that the parallel market has maintained to trade around 485 Naira to $1. It's been hovering around that levels. In January, it got to the highs of like 490, but this has been able to keep it at a stable level. And we believe if this continues, we still see a slight appreciation of the Naira in the parallel market. So I think all these are the reasons why they are extending the deadline for the Naira for dollar exchange policy.
Okay, thank you very much, Omorige. So you mentioned that remittances are around 5 billion. Do you mean that as the historical figure before Q1 or before the original circular was passed across, or is that what we have seen between the time of the circular and now?
Yeah, that's the historic figure. That's what we have been saying. So it's around that figure, 5 billion per quarter. That's what we bring in as remittances from dollar remittances into the system received by recipients is around 5 billion per quarter. So giving this incentive, so recipients will be more likely to bring in their remittances through the official windows, the licensed IMTOs and the commercial banks. And we believe that we kind of like improve that amount, given that this policy has just been in play for less than 2 months.
Hello, Mariam.
Can you hear me?
Yes. Yes.
Yes.
So okay.
So I said that has been the historical figure, 5 billion per quarter. And also given that this incentive has not really been around for a long period, it was introduced March 8, 2021. So it's barely been around for like 2 months. So we believe that them
So we didn't see any shift in the value of remittances, any slight shift, any slight increase.
You know, we saw a slight improvement, but it's tracked by a quarter. So it's just been around for like two months now. So by the end of this quarter that we are entering, I should be able to give the accurate figure. It increased by.
Okay, thank you very much, Amarige. I see that Mushakwe has her hand raised. I think she'd like to add something to this. Good morning, Mushakwe. Please go ahead. Please unmute, Mushakwe.
Good morning, Chima. Good morning, everyone. Just like Omarigi said, remittances are tracked quarterly, but I think in an outing, the CBN governor recently confirmed that they've seen an improvement in remittance inflows since the introduction of the Naira for Dollar scheme. I can't remember the exact figures now, but he confirmed in a recent press statement that remittances have gone up. We won't get official figures clearly until probably the end of the second quarter, when we get the balance of payment updates for the second quarter. That's when we'll confirm remittance figures. However, we cannot also strip out the fact that global tourism, which is usually more like informal means of remittance exchange in this part of the world. We can't strip out the fact that global tourism has not recovered. So that's a big risk to the outlook of the success of that scheme. The 5 Naira doesn't erase the fact that the cost of remittances through formal channels is still high. That 5 Naira really doesn't make up for costs that the sender has to bear in the process. So I feel in the medium term, once we get more clarity with COVID situation, vaccine administration and all, I feel that the return of global tourism would pose a big risk to the future success of the scheme. But for now, I think it's something that is doing well at the moment. But in the medium term, we need to probably review that policy as global dynamics evolve. Thank you.
Thank you very much, Mushakwe and Omarige. So now we'll double back to Sean. I think he has some figure updates for us. Please go ahead, Sean.
All right, thank you, Chima. Just to speak to the figures around the domestic and foreign participation, like I mentioned earlier. So what we've seen is as at the end of March, which is the Q1 report, foreign investors have done just 22% of the market, while domestic investors have done 78% of the market. And what we've seen, like I mentioned, March was the lowest figures for the foreign investors. They did just about 17.7% of the market in March, and domestic did about 82%. We believe these figures should improve in April, based on the fact that we've seen them reinvest the dividend that has been paid, due to the fact that they couldn't take out, they've not been able to take out those funds. So largely domestic investors have been the main actors in the market this year, with about 78% of the turnover done by that sector of investors. Thank you. Just to put that out.
Thank you very much, Jim. And thank you to everyone for joining the session today. Just to restate, next week we'll be having an additional exciting new segment on the Ghanaian market, and it promises to be exciting. Thank everyone for joining us today. We hope that you continue to stay safe, and we will see you next week.